Okay, all right, all right. Good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, April 28th. Mike Boutros with you on the horn. We just got the release, guys, of US GDP for the first quarter coming in at a negative clip. Here we go. Recession talks are going to be on the talk. Negative 1.4%. Forecast was for a positive clip of 1.1%. That's the first contractionary quarter that we've gotten in US GDP. And certainly the talk of the town will be about that all day today. Good to be with you guys today. A quick cautionary note, we are heading into the final day of trade for the month tomorrow, and markets are on a ripper, okay? This clip may interrupt the dollar rally, but guys, it's been a runaway trade on all accounts. So we'll go through the list today. DXY, Euro, Dollar CAD, SPX, Sterling Dollar, Euro Aussie, Dollar Swiss, Aussie Dollar, Kiwi Dollar, Silver, Aussie Kiwi. Take a quick look at Gold, NDX, and DJI. Got all your lists on here. Try to get through all of these as quickly as possible. So first look here is on the DXY. Here's what it looked like a few days ago. Again, a quick note before we get into everything and the nitty gritty, guys. You may not be satisfied. It's a tough webinar today, okay? All of these trades are runaway trades. I'm not going to advocate for new positioning, guys. If you're not in this, there's certainly the opportunity in the days ahead for a massive fade on a lot of these moves, especially heading into close of the month, close of the week. But they're stretched. They're stretched. Anything on the long side of the dollar is stretched. Anything, a lot of these trades are just really stretched. Aussie at support, Kiwi at support. I mean, we can go down the list. So first things first, here's what the DXY looks like. And here's what it looked like again a few days ago. We were breaking above that high week close from 101.94. We're well above that now, guys. We're well beyond the targets that we were looking at. On the daily chart, it ripped through, okay? 103.82 was the last level that we were talking about. That's the 2017 high. That's what we just clipped here today. This is, again, the weekly chart. What matters here tomorrow is where we close with respect to 103. If we close southbound of 103, it's the quintessential exhaustion. This is a massive exhaustion region with the 2017, 2020 highs. That's going to be your focus tomorrow, okay? Excuse me, what we do around 103. Daily chart looks like this. Get a little bit grittier. 103 into 103.21. You got the 2017 high day close and the objective 2020 swing high. Again, 103 is the focus into the close of today and the close of the week. So keep your eye on that and what we do with respect to that level. 103.82, again, still near-term resistance. Here's the scalp. Again, the news today for a negative clip, guys, was way off kilter. They were looking for a print of 1.1% positive. The first quarterly contraction in GDP growth at a negative 1.4% clip. So if this is going to be the trigger, the catalyst, the dollar has been marking divergence into the high. The dollar clipped that 103.82 level. It may be a decent fade opportunity right here. Anything we take counter trend, guys, over the next couple of days, if you do try to attempt it, much smaller leverage, much smaller positioning because we're trading counter trend. But certainly this is a nice little catalyst and markets are stretched. So keep that in mind here. Any questions on DXY? There's nothing to update really on the intraday chart. We've already climb through that last target, like I said, 103.82. Beyond that, a breach of the highs in the DXY, man, there's nothing like 104.88. You're talking about the 1999 swing high, decent pivot in price. All right, so it gets it gets really testy with a push through this region. Certainly, we're looking to see if this GDP release offers any catalyst, but guys, I'm more inclined here to wrap up the month, okay, than to get involved in anything new. I don't know if I'll give an update tonight. It really depends on what the market does today. Again, I don't want to encourage chasing this And at the same time, the levels that we're reaching right now do look appetite. I do have an appetite to try to fade them, but we need a little bit more conviction, smaller leverage heading into the close of the month. Really important factors taken into account the market conditions before we operate on any given trade. That's DXY, number one. Number two, before I do that, Ty, I see you in the room there. Here's what the 10-year looks like. We're pulling back, but we are making another run here today. So here's the 10-year I've been showing you on the weekly chart first, okay? That 292 level, which held last week, the 88.6 of the entire 2018 drop, has continued to offer some resistance. So nothing really new here per se, right, on the weekly chart. Daily chart, still struggling, right? We saw an update yesterday. It was a pretty big reversal candle. I still think you could probably get some more upside, but I don't think it'll last. I think this GDP print also will start to weigh on things. Here's what it looks like on the intraday chart that I've been showing you. That pitchfork, I'm not putting too much stock in it. 618 of the drop is 288. Let's see if that holds today. A blow off through 292, and you're just going to look for a resumptive move. But again, looks like smart money may start to choke off that rally in yields. All right. Now, jumping into euro dollar, stretched again. As DXY is stretched, so is euro. The level that we talked about early in the week, we were looking for major inflection where? 106.37, 106.60, right? That's major inflection. That's major inflection. It's either a hold or a break, and if the break happens, jam it down. That's exactly what happened. We got the break. This is the weekly chart. I'll show you the daily in a moment. It accelerated on a slingshot right into 105.30. Next level down, not until 104.50. Now, again, there's reason to be cautious here. This is the weekly chart. I'll show you the breakdown in a moment. What matters this week is how we close, specifically with 105.30, but more importantly, that 106.30, 106.60 level. This is still critical. This is still critical. Watch the weekly close tomorrow. Watch the monthly close tomorrow. Here's what euro looks like on the daily chart. Here's what it looked like last night. All right. Can I have the daily the 10-year? Yeah. Here's the daily 10-year. Nothing new here, Ty. Nothing new. Looking back at the euro, and here's again what it looked like last night. The focus here was going to be what we got around 105.20 with the drift into 104.46. Both 104.62, excuse me. Both of these are levels of interest, like I noted yesterday, for possible exhaustion on this downtrend. This is the 6th consecutive downside move. We are in downtrend support, even if you do some, more extrapolating here on this slope, take a parallel to the actual swing low from right there in March, you start to see, well, trouble ahead. So it's a stretch trade. Anything on the short side of the euro is chasing. We just got a pretty bad read on US GDP. Can that interrupt the decline? Here's what the scalp looks like. Now, this is an amended slope, this pitchfork here. This is the 4-hour. I'm going to zoom it out to show you exactly what I'm working with. This is just a modified slope, guys, on the pitchfork to match this basic trend line off the highs. All right, 2, same slope. Just match that pitchfork to the same slope. Median line break, saw the accelerated drop. Here's the lower parallel. Converges on that 104.62 level. Now, we didn't quite clip it, okay? The low registered, what, pips off? 104.71, 9 pips, right? Looking for a possibility for some exhaustion here. Now, what I always tell you, when we're looking for these inflection zones, if they break, that's a tell too. A break of downtrend support in euro from here. That's why, if that happens, wouldn't be too surprised to see 103.80 in a hurry, right? Just like we saw here. A break of the downtrend oftentimes is the sharper washout. So I'm looking for a reaction here today. Again, this is a candidate for a possible fade scenario. You have to be super careful, super light. reduce position size, tight stop against 104.62. I want to see the US Open materialize first, if possible, see if we get another drive, but it's stretched, guys. It's stretched. I just want to caution because we've been saying it's stretched for a couple of days, and every time we say that it hits a level, it drives through. We could be capitulating here, but at the end of the day, support. We're seeing all these levels line up. Look for some sort of inflection near 104.62 if we get it. Here's the 2-hour chart. And here's the 60. All right, we got an outside reversal candle right off the low. So let's see if this carries through. All right, that's number 3. Okay, euro dollar. Number 4, here is loonie with a massive breakout of epic proportions coming into some pretty important levels of interest. That is right here on the weekly chart first. The level we've been talking about, 127.50 into 128.14. It's a 64 pip range of resistance that has held for the entire year. We tried it back in January, back in February, again, all through March. Here's the reversal and try again. We've made multiple intra-week highs into 129, so we can't dictate anything till the weekly close and the monthly close, obviously, at the end of this week. So what I want you to look at here, a couple things. A, you've got the median line spoken right through. We're there now. B, the yearly high at 129. Okay, now ahead of these levels, well, let me take a step back. If we close below this resistance zone again, a perfect fade scenario. It's going to be the same as all of these weekly candles. Okay, so the weekly close tomorrow, the monthly close tomorrow, do not get faked out. It's a classic time for the markets to wash out. You get a whole bunch of position rejammering. We've just seen an extended move. The markets just got horrible news of a contractionary quarter in GDP growth. Expect some volatility, guys. Okay, that's dollar CAD on the weekly chart. Daily, what a stretch. A breach of the monthly opening range high right here on the 22nd had us looking, we talked about this on Tuesday, for a late month high. Well, there's one day left after today. Okay, we're at resistance. What's resistance? Well, you've got the yearly objective high day close. Not Mike Boutros's opinion, not Jamie's opinion, fact. 128.80. That's exactly where we just probed. The high registered at 128.79.8 proper. Okay. So I'm not saying that's necessarily the high, but certainly a beautiful spot. Just higher, 129 is the yearly high. It's the 1618 extension from the low of this month. Beautiful spot. Beautiful spot. Here's what it looks like on the intraday. And here's what it looked like on the intraday last night. Okay, so all those levels we were just talking about on the weekly, on the daily, big resistance right here, right? We just stretched into it. Now here's what the intraday looked like last night. Here's the level we're looking at. Here's where we are now. Okay, so we're at resistance. We're at uptrend resistance. We're at lateral resistance. I feel like a broken record, but we're there. I'm no longer interested in participating in dollar CAD long exposure from here. If you are holding dollar CAD long exposure, a good area to start reducing position size, if not closing out completely, bringing your stops up. For new exposure, again, this is where you want to start to look for inflection. Now, you don't want to get too, again, excited. We're going to stay reserved. We're going to look for more signals on the near term as we head into the US Open. But at the end of the day, you're basically looking for the threat of topside exhaustion into 29. That said, if 29 breaks, there's nothing till 29.40. That's a soft target from the 2021 high day close. And then you're looking at big resistance into 130. So not out of the woods yet. At the end of the day, this is the first hurdle. Ultimately, longer term, I do think you're going to see this rupture on the top side. Immediately, top side rally is at risk into 29. Questions? Ty, everything on your list is on the list except for crude. You love crude. I got you. All right, so that's dollar CAD. Number 4, here's SPX, also from last night. I felt it very heavy on my heart to continue just to track this trade, guys. It's working. It's working perfectly. Look, we didn't get the 41.37 tip, but I do think the threat was for a recovery off that low. And we started to get it a little bit early yesterday. So I wanted to give you a heads up, a reminder of where we are on the SPX and what matters heading into tomorrow. 41.97, the basic 236 of the advance from 2019 has not been broken on a close basis from the weekly standpoint yet. Okay, we're still trading above that. We've made multiple attempts below. That's, we need a weekly close sub 42 to validate the resumptive move for the extension lower. Remember, if the lows break in SPX, we're essentially looking for 39.24. Okay, at least 2 equal legs off the high to complete a corrective move. That would give you, another, man, what is that? It's another like 7% down from where we are. So the weekly chart's going to be the tell. If we close above 42, yeah, I'll grant this another couple of weeks maybe of climbing back above, trying to track for former support as resistance. But, at the end of the day, it's a sell rally type of trade, right? Here's what it looks like on the daily chart. Okay, again, a break of that slope to the downside was tested as resistance 2 days ago with the 618. Again, 4309, still resistance. The downside, 41.17. I have a nestled region here with those lows. I'll show you in the intraday chart in a moment. That's the breakdown you need to really mark resumption, right? That's the 2021 low day close, okay? It's the lows that we made for the year, essentially, just right around there. It's the median line. If we get back below that, 40.35 soft target, 39.24 is huge, okay? On the immediate approach today and tomorrow. You're looking for 43.09 resistance. You're looking for 43.91 resistance. Here's what it looks like on the intraday chart I showed you last night. Okay, so we climbed a little bit into the close. Still thinking you could get a spike maybe into here, max here, and then you look for the move lower. Today's data, obviously the markets haven't opened yet. Today's release, this is a pretty big upset. Pretty big upset. Remember, guys, what dictates a recession? What's the definition of a recession? It's 2 back-to-back quarterly contractions. That's the definition, the textbook definition of recession. So if we just clipped our first one, we could be 1 foot in. Hate to say I told you so, just to tap myself on the shoulder for a sec. I've been saying this for weeks, but in any event, here we are. Questions on SPX? We'll hit the others in just a moment. I'm going to just go in order of our writing here. So I'm going to segue back into FX, and let's take a quick look at what's going on with the British pound. Another runner, a runner that just collapsed. The level that we were looking at was right down into, what was that, 2430s. I was looking for a major inflection there to see if that holds. If that gives out, a break of downtrend support should have unleashed like another leg lower. Well, here's the British pound now. Weekly chart. 24.98, there it is. 618 of the entire 2020 advance. We're ripping through it. Watch the weekly close. Again, that's what matters on this chart. So we're going to see how we close tomorrow in reference to 125. Anything sub 2250 is the next major level on the weekly charts that comes anywhere in line with trend. A good lesson on technical analysis. Again, I always like to drill these home. A break of downtrend support, oftentimes the sharpest part of the drop. We're seeing that now. Watch the weekly close. Sterling on the daily chart looks a little bit, what's the word? It could still catch itself. It could still catch itself. 24.98, again, the 25 handle. It converges on the same pitchfork, guys, that we've been following since March. Okay, it's the same one. So we're down here. We haven't closed a daily mark below 25 yet. So watch today's close. Again, if it persists, I'd have to continue favoring the short side. There'd be no trade for us to take, new positioning for us to take from here. Take a look at this on the intraday from last night. That was the level we were looking for, or this was 2 nights ago. That was the level we were looking for some sort of inflection. Here's what it looks like now. 4 hour, 2 hour. Looks pretty ominous. Looks pretty ominous. If that was a break, you would want to see an accelerated move. Guys, we just got the accelerated move. If US markets open and the failure to pump here comes anywhere near 25 and you fail again, I think you're on your way. I got a soft target at 22.50. So it's one of those trades where even though we have a definitive bias, even though we have momentum in the favor of that bias, from a trading standpoint, there's no respectable stop except up here, 25.68. I'm not going to take a 110 pip stop. Not at this juncture in time, not at this juncture in where we are in the week and the month. It's just not prudent. So for all intents and purposes, guys, sub 25, Sterling's in free fall. Sterling's in free fall. All right. Now, I need to take a step back. Everything we just talked about, guys, you have to preface it by the fact that tomorrow we still have some major US event risk on tap. Core PCE for the month of March, the Fed's preferred inflationary gauge. Guys, the headline came in at 6.4%. That was like a 40-year high. Core came in at 5.4, expecting 5.3. If inflation runs even hotter, and then you've got the first contractionary GDP print, this is recipes, guys, for much more volatility in not only risk assets, but also the corollary moves here we're seeing in FX. So buckle up, stay nimble, don't chase. That's British pound. Number 7, a quick note on Euro Oz. We had brought up this trade. Someone here in the room had brought it up. And we were coming off big resistance. The focus up here was to find support, ideally ahead of the 50, but we were looking for support on this drop. For Euro Aussie, I haven't been involved in it, but we got support, not quite at the level we were looking at, but through one of the levels we were looking at. I wanted to highlight, though, if the reversal here is legit and you get a larger sort of reversal, this is also the objective April open, right? We broke the monthly opening range highs, on this move here on the 22nd. So I would expect this trade to resolve the month, maybe a little bit closer to the highs. Weekly open resistance is 148.96. It's kind of running away from us already now, but if you had, and didn't talk about it earlier, but in any event, if you're holding, if by any chance you took that, that's sort of the level I'm looking for, is the weekly open. And in fact, if you take just a retracement of the weekly range, the 618 comes in just a bit higher, near 149.30. So possible levels, where's the 38 to? We're there now, possibly to, there we go. Possible levels to keep in mind for Euro Aussie over the next couple of hours and days here. All right. Quick note on that. Number 8 is dollar Swiss, another one I haven't been getting involved in. I don't really like the trade, but a lot of you have been asking about it, and it's another breakaway trade. So these don't seem to be, for me, guys, like feasible trades. I know you get very excited when you see a one-dimensional break, but we have to stay disciplined. And from a trading standpoint, like I said, direction's only 50% of the game. There needs to be a setup. So we actually don't do all that well when markets just break and rip, because unless we're in that trade and we're kind of fading out, we need some back and forth. Here's the trade, guys. I gave you the update showing you this level near 96.40, 96.70. We just ripped right through it. The next topside objective levels are going to be near the slope. So you're looking like 97.90s, 97.86. And then 98.30 is going to be the objective 2019 open. That's a little bit higher from where we are now. Nice pivot in price. But it's just not something that I'm super interested in. Here's what it looks like on the daily chart. Even more of a ripper, right? It's, I don't know what you want to do with that, but those are the levels. On crude, silver, and gold, I'm looking for a washout, numbers to fish that. I got you on that. Yeah, we'll hit all three of those. All right, number 9. Let's get into some of the other calm currencies. So here's Aussie, another breakdown that is just, could see another accelerated approach. Here's Aussie on the weekly, and here's what was our last Aussie update for you guys here on SB. The focus was a near-term support structure that we were looking at. I'll show you the intraday chart for a moment. We've since broken, obviously, and we're heading down towards 70. Now, 70 is massively important. It was the lows from last year. It was the late 2020 lows. It was the 2020 yearly open. It's this year's close low. All of that is in the same spot into the 90, into the 70 handle. Huge, absolutely huge. Now remember, once we broke below this critical region, 79, basically 74, 73, 90s, it's been a pretty bearish trade. This was our first pivot to look for inflection. We got another inflection here. That's exactly what you want to see. If the level has merit, there's nothing really stop Aussie from heading lower at this point. Here's the daily chart. I tell you guys all the time, I really hate these really acute slopes, right? They don't tend to pay too well, but looking at a really, really tight channel to the downside, again, you had 100% extension, 1, 2, 3 at 71.40. You had the 764 retracement, right? Okay, at 71.30. We spent a couple of days here trying to resolve it. I think you're getting the definitive break. Now, again, I can't chase this lower. If you're not holding shorts, unfortunately, I don't think there's a move for us here. At the end of the day, you have possible pivots a little bit lower from where we are now. 70.86 was the level I was looking at, but it's really the 70 handle, guys. It's really the 70 handle. On all different time frames, it's going to be 70. That's going to be the definitive move here for Aussie. Another free fall trade. Near-term resistance 71.40, same level. That's the level that we started the week at looking for support. We buckled below it, tested it as resistance. If we break this 70.86 level like we are now into the US Open, look for that drop towards 70. Questions on Aussie dollar? Still have US core inflation on tap tomorrow for all the dollar crosses. Number 10, here's Kiwi. New Zealand dollar also is coming into an interesting area of support to start the week. It's exactly the same trade almost, in that we were looking for inflection, some sort of rebound here. You got it for a while, but then the definitive break of the objective weekly opening range back on 26th had us looking for a late week low. The levels we were looking at, 65.39, 65.29, and then down into 64.88 and 64.66. We're trying to break this now. What does that mean? Well, for the daily chart, or let me take you all the way around. Here's Kiwi on the weekly chart. 64.56 is a measured move here I've had from the high we made last year. So 1, 2, 3. I have 64.56 on the weekly chart. I don't have that on the other charts, but I just wanted to highlight that. You got the 2018 swing lows just lower near 64.25. So it's a 30 pip range of critical support. This is a break of the yearly opening range. This is a break of the yearly low. This is all kinds of technically damning moves. That said, this is an important region in price. Don't take my word for it. Look left. Okay? Watch for inflection here. 64.25, 64.56. Here's what it looks like on the daily chart. That's the level to watch near term. This is the intraday chart, excuse me. Here's the daily chart. Right here's the 618 extension, just lower. This is also the 50% retrace. Let me go ahead and get rid of that and amend this to the levels we're looking at, something like this. All right, this is critical for Kiwi. This is critical for Kiwi. Okay, now that puts an interesting, any questions here on Kiwi, by the way? Now that puts an interesting sort of twist on Aussie Kiwi, which is a trade we've been following as well. look for possible exhaustion on the top side here, okay? I was looking for exhaustion at 90.30, didn't even get a hint of it. It just ripped right through. So I didn't, get involved in anything here, but if we zoom this out, right, possibility for some exhaustion, Aussie Kiwi, definitely, this is Euro Aus, excuse me, right here. The possibility for some topside exhaustion here still, I mean, was that the complete correction? I don't think it was. Remember, we started turning negative on this as we were heading into 190, 109.70. Spent a couple of weeks. I think Marcin, you were asking about this. It failed ultimately. We got a beautiful pullback into support. This rally I was looking to fade. We've had no fade exposure. We've had no fade even, like this was the only hint of a fade. It ripped right through the 618. So not in this, it's a possibility for some exhaustion. If we get to the upslope, maybe. I don't even want it to get that high. But on the relative performance, might be a decent move here for the pullback. Something to keep in mind there on Aussie Kiwi, number 11. Okay. Number 12. Here is silver. The focus pivot zone, we opened the week. I think you were asking about this, Ty. Here it is, buddy. 23.29 into 23.58. Key zone of support. Told you to watch for a pivot there. I think you just got it. Here's silver trading today. So let's focus first on where we are silver on the weekly charts, right? Here is the weekly chart. The break below 23.40, same level, 23.53, right? The 618, that's also the objective. I think it's the yearly open or the yearly open range high. Here's what we need to focus on. The outside reversal, we talked about that last week, is a bearish formation. We're getting bearish follow through. You need to close sub 23.50 this week to continue favoring the downside. Okay, short-term slope here. Okay, so again, the immediate decline could be exhausting, but I would look for exhaustion on the top side if you start to recover ahead of 24. What's 21.66? Ty. Hey, Rohan says, sorry joining. We are seeing the dollar high now. Yeah, we talked about the dollar. We talked about that at length. The pullback from that horrible GDP print we got doesn't look like it's materializing into much. But my whole jive, Rohan, is that this is a runaway market here. Okay, we cannot chase. We cannot chase. So if we don't get any kickback from any of the levels that we discussed today, you got to let it sit. We've got to look for some back and forth price action before we start to jump into anything else. For silver, Ty, here's what it looks like on the daily chart. Again, what is this, like 9 days down? It's insane, but here's the break. This is the pivot point we were talking about all week long. If today closes below 22.61 and down to 21, I would just call 22, right? It's the yearly lows. But today needs to materialize a close below this zone. If we close back above, it's your quintessential exhaustive trade. Look for the recovery. Ultimately, you do want to fade that, but you could get if we close above 23.25, you could get that recovery. All things held constant, you're looking for that drop towards 22.60. Bearish inval, next downside target. All right. Thanks. Yeah, pullback quickly erased. Quickly, right, Rohan? Quickly. And that's how you know the draft, the inertia is still behind it. It's still behind it. And you're heading into the end of the month, Rohan. It's classic clean out. It could just rip for another 100 pips and pull back. This is where retail gets chopped up. So caution there. It's 11. That's number 12. Is anyone trading sterling Swiss rather? I went over this trade for March and I don't see him in the room today. I just wanted to kind of highlight, I always like to follow along what we've been doing here. The pullback, remember we were looking for support off of one of these two retracements, specifically, what was that? 120, I can't even read it there, 123.30s or something. It collapsed. It came right through, went right lower. So here's the new modified slope I'm looking at. I'm bearish it's out of date right now. I'm bearish below 23, break lower from here. You know, there's a lot of room. This is at major support. So if this fails, guys, there's a lot of room. There's a lot of room. Now, again, you're trading two competing losers. Swissy is just completely plummeting, right? Dollar Swiss is at like ripping to highs, and sterling's falling through the wall, through the floor. Excuse me. You can tell it's Thursday. I'm getting tongue twisted. So that, again, it doesn't give it to me like a raging bias trade, but certainly, hey, you're at the lows, you're at the monthly range lows, you're at the monthly open. It's the end of the month. If this thing cracks, guys, there's a lot of room. So just a trade, again, it's on the watch list. Haven't executed on it, but look and see what kind of reaction we get into the end of the month at this major key low. All right, so that is number 13. Here's gold. I'll be putting out a piece on this on Daily FX later today. I think we want to be looking for a near-term low is kind of the idea. I've been talking to you guys since the start of the week. It drove through. Let me take a step back. Here's what gold looks like on the weekly chart. And here's my concern. If the weekly chart materializes a close sub 1903, well, then that's a break of major support we've been watching for the last 3 months, 2 months. Okay? Sorry to harp on it. The immediate second test of the highs and pulling back now is licensed to short off the high. Nothing is a license to short off the high. I don't believe in that commentary, but certainly there could be indications for a better move. Rohan, the one thing I do want to just note for you, yeah, I agree with you. I 100% agree with you. I've been telling everyone in the room, looking for a fade scenario. I think all of this is a possible fade scenario. The daily opening range matters to me, Rohan. So unless there's a spike fade opportunity, which this could be, I like to get to the positioning right into the U.S. Open. So into the 930 slot, you get your U.S. opening range, right, as the cash markets open, and then you start to really ride the wave into the open. But try not to track price too closely. We just got a major release, which was really bad news. I'm looking for the fade. Yeah, on all of these. Same thing with the euro. On the euro, we actually made an hourly outside reversal and then closed at a doji, which kind of canceled that signal. Let's see how it heads into the US Open, Rohan. Definitely a possibility. You're getting divergence. It's all across the board. Looks good to me. Yes, I'm finishing gold. Here's gold. I got you, Ty. Here's gold. So for gold, right? That's the focus on the weekly chart, is where we close with respect to 1903. Keep that in focus, write that down. Here's gold on the daily chart. What are the two levels that we talked about this week? Right? Here they are. Well, actually, this was last week. 1891 and 1877. That's the 618 of the yearly range. Fact, not Mike Boutros' opinion, fact. That is the 100% extension from the decline off the high. Again, fact, not Mike Boutros' opinion. Here was the break. That was the pivot. Here was the break. That was the pivot. It's actually a phenomenally clean trade. 1891, 1877. Could we get a pivot here? Sure. Look at the chart. Don't take my word for it. Highs, breakout, acceleration, lows, right? Lows. So sure, yeah, we can get inflection here. These are the two levels we've been talking about for the last 2 weeks, guys, that we were looking for possible support. I think you get it near, all right? Near term, that is. It's not the end of the trade. In fact, the trade has broken uptrend support. So for all intents and purposes, Ty, the risk is still lower in gold. However, wash out to the line. Yeah, Ty, I do think you possibly get a 1815 washout, but here's the thing. Tomorrow could be the big day. If inflation comes in hotter, okay, inflation comes in, again, the expectation is 5.3 on core. If we get 5.6, 5.5, and there's no reason to think you can't get that, because again, the underlying current of inflation is there. As a student of economics, inflation is prices are notoriously sticky, right? It's not going to be a case where you come in, oh, it's 5.1, inflation is soft. I don't think that's where we're at. If inflation runs hot, Ty, inflation is one of the primary drivers historically for the hedge of gold. Now, it just so happens that at the same time, you have radical interest rate expectations with markets starting to price in 50 basis points next week. The Fed is on tap, by the way, guys, next week, right? Markets are pricing 50. There's a growing expectations for possible 75. I think a lot of that's going to be determined on how bad inflation is tomorrow. But with respect to gold, it's a very gold sensitive market reaction. So could we get the washout to the line, as you say? I think you're talking about the uptrend. Certainly could. Certainly could. That's the next confluence region of support, right? Where trend converges on lateral levels. So certainly that is the risk with a move lower. But hey, this is a big level. This is a big level. Former swing highs, former swing lows, and it keeps going on. Now, with that all in mind, this is the daily chart, right? This is the daily chart. If I drill down deeper, looks like we just came off of downtrend support, lowered floor. This is called a lowered floor. When you have slope support that is just missed, not achieved, and reversed. You can also get a raised ceiling when it comes right ahead of slope resistance and turns lower. So it's a phenomenon that happens. Now, this is why, for your question, Rohan, before you start to assess reversals and should I fade on something like this, this is exactly what you want to see. Former support, break lower, instant resistance. Now, if you're turning resistance kickback, this should fail ahead of 1877. If we are heading lower, then the pop through the channel gives you the run. Okay, but this is the assessment. If this is a real low, this is the assessment. We hit resistance, former support's exactly what you want to see. If this is trend resumption, you go right through. If this pullback falters at a 618, let's say, right? And I'm getting real granular with you guys here today, but if it falters at a 618, wait, stop traffic, that's 1877. It's the same level we were looking at. Awesome. Oh, I'm sorry, that's the 786. Let me take that back. 1881. So here we go. Both of these levels, okay? On this pullback, these would need to hold. If you find some support there and you bounce, that's your stop. You need to break above 1894 to mark the resumptive move. Again, what matters is the weekly close with 1903. So even if that's a short-term play, guys, you're still in the downtrend. Still in the downtrend. Okay, and the overwhelming current is still lower. You just broke below a major pivot in price. So while I take these, guys, I counter trend trade all the time. It's not, again, I've been doing this for a long time, but I'm just saying, like, I try to keep you guys more in line with trend, so you get the swings, right? If you're interested though in this real near-term price action, sure, there's opportunity there as well, Rohan. But you have to be very adaptive to the market. So whenever we're trading counter trend, we're reducing our leverage size, we're cherry picking those entries, we're really well disciplined with our stops. You know, if risk, if you're practicing good risk management, I can get as granular as you want. I used to sit on the trade desk for years and just watch retail flow come through. So this is something that's very near and dear. Thanks, very insightful. You're more than welcome, Rohan. Cheers, mate. All right, so we went into the weeds there a little bit on gold, but let's move right on. That's number 14. Here we go, NDX. Let's get some more of the equity movement that we're seeing here as well. Clean moves in NDX. I think I have us at support, Rohan, and that is a basic 38.2 retracement of the advance. Here's NDX first from the weekly chart all the way down. We've been talking about 12,947 for a while. It's the 38.2, the entire 2020 advance. Just lower is the 2021 low week close. This whole zone is what we were looking for on the initial February drop and the March drop, and that's where we turned ahead of. Massive outside reversal candle on that week, remember? Rallied into resistance perfectly. Another reversal candle broke lower. This thing has been textbook. This zone is problematic for me but it's also going to be very telling because if this breaks, the measured move is 11,520. There's a lot of room, but first things first, you're at a major support hurdle. That's on the weekly chart, okay? This is no longer the low close. Well, it is still, but you know, don't worry about 13,300 so much just yet. Here's what it looks like on the daily chart. All right, you're at the yearly lows. You're at that 38.2. In fact, today's low or yesterday's low registered at 12,936. We have 12,947. Doesn't get much closer than that. So I'm looking for a reaction, an inflection here today. If it breaks, should be a straight shot. Should be a real quick drop. Okay. Like I said, next level down, 12,439. That's the September 2020 high. And then just below that, you have the October 2020 high. Very nice pivot in price. Highs, highs, highs. Break, support, support. That's down on slope over the next few days. Drill down even deeper. Here's what it looks like on the 2-hour chart. I've been showing you guys the 4. And again, side-by-side comparison for where we've been on SPX, NDX, same slope. We're here right now. All right, no change to any of the levels, Ty. Look for initial resistance along the median line, but 13,878, 13,948, that's still resistance. Don't mind the 618 at this point, but that's still resistance. Bearish invalidation at the 2020 low week close. That was last month. And then again, anything sub 12,947, there is that zone on the weekly chart into 12,688, but you know, you're risking a whole drop here. Questions on NDX, NASDAQ, one of the bigger of the losers here. And that's number 15, full suite here today, guys. 16, Dow Jones, and then we'll wrap it up with some oil here to finish things up. Here's what the Dow Jones looks like. Ty, I hope you caught this, brother. You were on this, and you were, you know, continually asking about it, and I was continually saying, well, man, this is just, it's just not ready. It's just not ready. It played catch up. It played catch up, and the break here is materializing for the first time on the weekly charts. So recall, one of my big problems, or one of my issues with Dow Jones, is that it never really broke major uptrend support. I mean, it happened here in February or January, but you know, the slope, which is the parallel that held the SPX, right? That broke last week. That held the NDX, right? That broke, you know, way early on. Never really broke in the Dow Jones. In fact, both of those turns, both in March, turned well ahead of that slope. What's up? What's up? This is big. 33,500 is what we need to see a weekly close below. If we get a continued weekly close below this, you're looking for the lower parallel. You're looking again for that major drop towards 32,530. Forget that 100% extension. That's null and void. That was the initial drop. Let me drop that. Actually, let me change that. That 100% extension, new low, new high. That's the measured move. If we drop sub 32,530 here, your measured move would be down here. Okay, this is all assumptions that we're making from the daily chart, the weekly charts. So when you get this kind of clarity, this kind of technical clearance, you get excited. Here's Dow Jones on the daily chart. Okay, just wanted to keep the slopes to show you guys how this played out. I'm gonna get rid of these now, okay? But you can see uptrend support, broke, accelerated move. It's exactly what you want to see, okay? So At this point, this is the pitchfork I'm working with, looking for resistance ahead of that 75% parallel. On a break lower, the low day close is 32,830. The 100%, did I redo this one? I redid this one. The 618 and the 236, again, 32,530, 32,006. Break to the downside, the measured move. Beautiful. I don't know why I didn't have that on the weekly chart. Sorry about that, but it's here. Okay, so no change to any of the Dow levels. Okay, actually, I take that back. I didn't have that slope on there. So add that new pitchfork. Okay, here are the new levels high on the intraday. We're going to drop this. We can leave that slope. Here's hopefully resistance ahead of this level. Break lower from here. Again, 32,830, 32,530. And this is the old extension. Sorry about that. Boom. Okay. Watch the open. Watch the open. We could get a gap just on account of that number that we just got. Wow. Okay. Crude. Don't have much on crude. Here's what it looks like, Ty. I think you got a near-term break. We were talking about this early in the week, right? Here's your weekly open. So I think you got a near-term breakout of the downtrend, and in fact, a breach of the weekly opening range. It does put an upward tilt on the near-term slope higher. But Ty, with that in focus, brother, look where you are on the weekly chart, man. Like, I don't get involved when we're sitting mid-range like this. I like to be near resistance. I like to be near support. I like to be within a well-defined structure. If you're trying to range trade this, you know, more power to you. Not my cup of tea, but there's not a clear-cut structure here for me to say resumptive on the uptrend or corrective. Right now, you're making a series of lower highs. You're making a series of equal or higher lows. You're sitting at the monthly open. This is where we opened April mid-range. Ty is nothing here. No, not looking for the washout. I'm not looking for a long-term entry. I'm looking, you're saying, right? Looking for the long-term entry on a washout. Okay, I get you, but the levels haven't changed. You need to move near trend support, basically the monthly range lows. If we get there, I'd be very dubious because I do think that that would crack and you'd probably get a run on 88. But, you know, I don't think we're anywhere near it. I don't think we're anywhere near a washout yet. You're gonna have to see something a little bit more dramatic than what we're getting here. All right. So again, near term, you know, the near term breakouts have gotten some runs, but you're pulling hairs. You're trying to pull hairs here. Okay. All right. That's number 17, full suite. Ty, Rohan, last question, I promise. I'm long euro and sterling with a stop against today's lows. What should close and wait for the open flows or let it ride? So Rohan, I can't tell you what to do, whether you should close or not. I don't know what your risk tolerance is, what you're trying. I mean, trading is so personal. So I'm making an effort never to actually like give you exacts. I can tell you what I'd be doing. Okay, I like the euro rally, the fade position. The position that you would look for is a defensive one. So Ty, on a move like that, just again to give you reference, I wouldn't necessarily even have a limit. My stop is in place. Want to see what the run looks like. If I start to get a run and I know that there's a low there, I'll tack on a retracement. Weekly retracement, last retracement. What's a basic 236? Where's a 38.2 line up on trend? That's your first target, right? Maybe even if it's a high-low high, near-term extension, drill down deeper. Where's the high-low high? Let's take an extension. Okay, there's 100. That's nice. So the counter trend ideal when you're walking into the market open is that you're looking for the defense of your idea. You're not necessarily looking for what's my target, because I don't even know if it's going to turn, right? So take that, you know, influence, I hope, and into your trading. Obviously, you know, I would have a stop below 104.62. I would have liked to see another stab into the US Open there and then trade it with a fade. But I think, you know, this is the spot. If we're wrong, 104.62, if it breaks, is going to be a straight drop. It's going to be something like this, right? It's not going to be a meander lower. So does that offer some clarity? And Sterling, man, you're way even more gutsy on Sterling, Rohan. I wouldn't touch this one's tough, brother. I hope your position sizes on these are very small. Sterling is one of the ones in my mind that's most dangerous because it's a notoriously professionally traded market. You know what I mean? We could see 23 and then close back above 24 today. I don't know. This is just one that I have enormous amount of respect in. You're deep into oversold territory. In fact, I put a piece out on Daily FX yesterday about Sterling. This is the most oversold that we've been on a weekly basis since the 2016 low. That's saying something. So be careful trying to catch a fallen knife, Rohan. It's never advisable. It's most always a fool's errand. And I've been there. I've been there with you a million times over. So I know where you're coming at. So just curb your you know, expectations as you head into the US Open here today. All right, guys, that's going to wrap up the week here for me. Best of luck trading. Watch out tomorrow. I'll keep you updated on MB Forex and SB Squawk on our Twitter handles. Keep your eyes out as we head into that inflation read. It's going to be big if it misses off 5.3, which is the core expectations. Watch out as the market digests this GDP print here today. You might get a lot of counter factual moves with what you're seeing in price and what you're seeing materializing in the market headlines with regards to recession. All the recession talks now are going to start flowing, right? First quarterly contraction. So don't run with the headlines, run with what you see in price, and make sure that you're staying tuned. Ty, you're asking about the Twitter handles. My man, MB4 at MB4X is my Twitter handle. You should be on that one. And at SB Squawk is the members only handle. I mean, you can choose to follow that or not. It's the one that's on the page on SB. So every day when you log in, that's, you know, the commentary you see here. It's usually links for the reports and any changes to current operative trades on the swing side of the set. Okay. And Jamie's handle, Ty, is at Jamie Setley. So that's that. All right. If there are no other questions, we'll go ahead and wrap it up there. Best of luck trading to the close of the week. Watch CPI tomorrow. PCE tomorrow. And I will catch you guys on Monday for the free session on Daily FX, right back here on SB on Tuesday and Thursday. Have a great weekend, guys. Cheers.